If you trade SPY QQQ, the S&P futures, or the NASDAQ futures, I highly suggest you stick around for this entire video because I'm going to be sharing one trick with you guys that completely changed my trading. But real quick, as always, if you guys do find value in today's video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so when you are trading any of these instruments, this is what I want you guys to realize. Say, for example, we are trading SPY. Well, if we are only doing our technical analysis on SPY, we are missing out on the overall bigger picture because SPY in actuality could be moving based off of, let's just say, NASDAQ ended up rejecting off of a key supply area. Well, if the NASDAQ ends up rejecting off of that key supply, more than likely SPY is going to go down as well. Or again, if we're trading SPY and we're only doing our analysis on SPY, well, what if ES comes down and it ends up bouncing off of a demand zone that we don't see on SPY? Well, the S&P futures and SPY are going to move exactly the same. So if we don't see that demand zone on SPY and we end up shorting going into an ES demand zone, we are going to lose money on this trade. But SPY could also fluctuate in price based off of what QQQ is doing. So again, say QQQ comes down to a demand zone and it ends up bouncing out of it. Well, if QQQ bounces, there's a very high probability that SPY is going to bounce as well. So if we are only doing our technical analysis on one of these instruments, it doesn't even matter. But if we're only paying attention to one of them, we are missing out on the overall bigger picture. Same thing could go for, let's just say, QQQ. Say you're only doing your analysis on QQQ and you're ignoring the S&P futures, SPY, or even the NASDAQ futures. You could be completely missing out on what the market is telling you because QQQ price could fluctuate based off of the S&P futures, SPY, or even the NASDAQ futures. So if you really want to start understanding the overall market and to increase your win probability, as well as the money that you make in the market, here's what you need to start doing. First off, you need to start doing your analysis on all four of these names. So when it comes to doing my overall analysis every single morning, what I am doing is marking key areas of supply and demand, Fibonacci retracements, support and resistance, and then any other chart patterns that apply to where current price is. So let me walk you through how I go about my analysis every single morning and come up with a game plan for the trading day. So the very first thing that I do is I start on the S&P futures on the daily time frame. So as we can see right now, we do have this Fibonacci retracement from this pivot low to this pivot high. So because that sticks out like a sore thumb, I am going to draw that Fibonacci retracement. And as you can see, very recently, we just bounced off of this key area. Once I am done doing my analysis on the daily, I will then break it down to a 4-hour. So on the 4-hour time frame, we really have no key levels of supply until we get way up here. So I would just go ahead and mark that. And then after that, I mean, we have a bunch of other ones way up here. Like we had a 4-hour supply zone right there that we rejected off of. We have another one way up here. And if you guys don't know how to draw supply and demand or Fibonacci retracements, I have tons of videos on my channel. So I will be leaving those down in the description. Make sure you guys watch them. But after I'm done on the 4-hour, I will then break it down to a 2-hour. Again, same thing. I'm looking for any areas of supply and demand or Fibonacci retracements. And then finally, after the 2-hour, I'll break it down to a 1-hour and then a 30-minute and then a 45-minute. Now, once I am done doing the S&P futures, I will then head on over to SPY. Now, the reason why you want to plot your levels both on the S&P futures as well as SPY is because the way that we trade in the post and pre-market session on SPY is going to lead us to getting slightly different levels, and we don't know which one price is going to react to. I've had a number of times where the S&P futures break below where that demand zone is, but it ends up going down to where the SPY demand zone is, and it bounces off of supply. But there's also been numerous times where SPY falls short of the demand zone, the S&P futures hit the demand zone, and price ends up reacting. That's why it's very important for us to do our analysis on both SPY as well as the S&P futures. Because like I said, let's break it down to a 5-minute time frame. I want you guys to realize this. If you're only trading the S&P futures or only trading SPY, look at this. So here's the price action today on the 5-minute time frame on SPY. Well, let's pull up the S&P futures today on the 5-minute time frame. The same exact price action. So if the S&P futures bounce off of a demand zone slightly before SPY ends up doing, well, guess what? SPY is going to go up in price because they literally move the exact same. The same thing goes for the NASDAQ futures as well. Let's look at the NASDAQ 5-minute time frame today, which again looks exactly like SPY and looks exactly like the S&P futures, because again, a majority of the time, NASDAQ, QQQ, SPY, and ES are all going to move in sync. But if we're looking at the NASDAQ futures, same 5-minute time frame, same 5-minute candles as QQQ. So if the NASDAQ futures come down to a demand point and it ends up bouncing, QQQ is going to go with it. Or if QQQ rejects off of a supply zone and ends up dropping in price, the NASDAQ is going to drop with it. So again, if you're only doing your analysis on one of these names, you are completely missing out on the bigger picture. So going back to what I was saying, like I said, I will always start on the daily time frame on the S&P futures. I'll go through, mark any of my levels, but then after that, I will go to SPY and start marking out the same levels. Now, again, just given the way that we trade in the overnight and pre-market session, sometimes on SPY, you're not going to see a certain demand zone, and sometimes you're not going to see a certain supply zone, but you will be able to see it on the S&P futures. So again, plot all of your levels, both on SPY as well as the S&P futures. Now I'll do the same thing once I'm done with SPY and the S&P. I'll head on over to the NASDAQ. Start on the daily time frame, go down to the 4-hour, 2-hour, 1-hour, 30-minute, and 45-minute. Plot all of my levels, but then when I'm done with that, I'm going to do the same thing, and I'm going to head on over to QQQ and start plotting my levels again. Because again, the way that we trade in the overnight and pre-market session, overall key levels could be at different points on the chart, and price could go up and hit the QQQ supply zone, but miss the NASDAQ zone, and price ends up dropping. Now, once I am done plotting all of my levels on the NASDAQ, S&P futures, SPY, as well as QQQ, that is when I will come up for my game plan for the day. And this is typically what my game plan looks like. So I'll write it all out. So this day I was looking for a bounce on the ES futures at 55.58, uptrend entry above pre-market highs or any intraday trend entry. NASDAQ, we had a bounce as well. You could also see these bounces on SPY and QQQ. I just didn't throw it in the watch list, but it was something I was watching just in case the S&P futures and NASDAQ futures did not hit that bounce level. I was then going to watch SPY and QQQ at their bounce levels, because again, if we ended up bouncing off of either one of those, the ETF and the future would have bounced at the same time. So I'll come up with the game plan for the day. Now, when I am trading, because let's say we have a NASDAQ supply zone as well as a ES supply zone, they're not going to reject off the supply zone at the same exact time. So the way that I kind of start seeing this, again, it's overall like a big old spider web between SPY, QQQ, and the futures, is if we are looking at, let's just say, NASDAQ, and we're looking for NASDAQ to come up and end up rejecting off of a supply zone. Well, if NASDAQ comes up and it rejects it, everything else like SPY, QQQ, as well as the S&P futures are more than likely going to reject as well. So it doesn't matter how good SPY and the S&P futures look. If NASDAQ comes up and it rejects off the supply zone, we can either short the NASDAQ or we can short QQQ, but we want to avoid trading SPY as well as the S&P futures because they're more than likely going to roll over as well and drop as NASDAQ and QQQ are. Or the same thing goes if you're watching the S&P futures or even SPY. Say SPY comes down and ends up bouncing off of this 61.8% retracement right here. So here's our pivot low to pivot high for the retracements. As we see, SPY ended up bouncing directly off of that 61.8% retracement. Well, if SPY is truly going to bounce off of this 61.8, the S&P futures are going to bounce, but also the NASDAQ futures and QQQ. So it doesn't matter how good a short looks on QQQ or the NASDAQ, they are going to bounce in price as well if SPY is truly going to bounce off of this area. So being able to watch all four of these things at once and understand what is happening overall in the market, it's going to help you stay out of potential losing trades, but it's going to give you a better insight in the overall market and help you make higher quality decisions about the trade that you are going to take. So like I said, if you are not doing your analysis all on SPY, QQQ, the S&P futures, as well as the NASDAQ futures, I highly suggest you start right away. This is going to give you a better insight into the overall market, but also when you are actually taking these trades, understand that all four of these instruments are going to move in sync. So if QQQ comes up and rejects off a key level, more than likely everything else is going to reject as well. Or if SPY comes down and bounces off of a key level, more than likely everything else is going to bounce as well. And I can guarantee you, if you start doing this right away, it's going to increase your accuracy as a trader, but you are also going to make a lot more money trading. So if you guys did find value in today's video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.